All right, so for those of you that do not know me, obviously most of you should, because I shared this on my page, but my name is Courtney Epps, and just to give you a little bit of brief information about me, this is my family. I'm an author and a speaker. I'm a mom of 6. You can see that from the picture. A wife, a tax strategist is what I really love to call myself, because I love freeing up money for people. So I reside in Greenville, South Carolina. I love to talk, which you will find that out if you've listened to me on any lives that I've done. I am a Coastal Carolina University graduate. I graduated, gosh, it's been 18 years ago, actually 22. So 16 years ago now. So I was 20. So 18 years ago now that I've graduated, and I'm a fractional CFO for 18 companies from $500,000 a year in sales to $13 million a year in sales. I have been doing taxes for the last 18 years, obviously, even before I graduated from college. And what I do about 475 corporate tax returns a year. So, I see a lot, and we have clients from every industry in the world. It doesn't matter if you're network marketing, if you are a home-based business, we've got plastic surgeons, we've got doctors, we've got lawyers. So you name it, we've pretty much got someone that we do that for. So getting right into it and what you came here for. So, what I started sharing, is, and I call it my aha moment. I was told in college that having a home-based business was not a tax deduction. And so I didn't really understand it, but I followed the rules, and what I realized is that a lot of the things that I learned in college are not accurate. And so, and I'll also tell you that if you hear something that I talk about today and you don't believe me, there's tax code to back it up. You don't have to believe me, but what I'm going to share with you today is just a way to free up money. And what I've done is I've utilized this information through tax attorneys, through other CPAs, and realized that I didn't learn tax strategy in college. So, I'm just teaching you the things that I use on a daily basis to save me money in taxes and to save my clients. So I had an aha moment. I actually, my story is about 8 years ago, I sold my business. It was an insurance agency and accounting firm. I sold it and the guy quit paying me. I lost everything. And so I was about $250,000 in debt, kind of in a really bad place in my life. And I joined an actual network marketing company. And what I realized is that there were massive tax deductions in that, because I did a tax return for someone in the group. And so although they had not been successful, I was able to help them save $4,100 more in taxes than they had the year before. So because I do so much with corporate, I really did not realize how big of a deal it was to have a home-based business, especially if you're a W-2 employee. So I know just by joining and attempting to earn an income or having some sort of home-based business, I don't really care what that is, anything that you're passionate about, I tell people to find something you're passionate about, something you can open your mouth about and share with people, and it's going to save you on average of $4,000 to $8,000 a year. And why that's super important, and I want to give you these staggering statistics in just a second, but 46% of Americans don't have an extra $400 to their name, and 66% don't have an extra $1,000 to their name. And so here's the problem with that. If you're sitting down with someone and trying to share with them a way that they can make money or save money, if you can't show them how to free up money to get involved, then it's a lost cause. And so I didn't understand that when I was in the network marketing industry. Now I'm obviously not. I promote speaking, consulting. I don't care what you do. I just love home-based businesses. So that's what I promote on a daily basis. So in getting right into it, I want to show you, what a tax deductible business expense really is, because most people believe in the myth that you have to make money in order to take a tax deduction. That's not true. You just have to attempt to earn an income. And this is exactly what the IRS says, is that any expense that's incurred for the purpose of gaining or producing income and is incurred with a reasonable expectation of resulting in future business and is reasonable under the circumstances. So what does that mean? That means if you're attempting to earn an income today or in the future, then it's tax deductible. I mean, obviously it has to be reasonable. You can't say, okay, I bought a Bugatti, so I can write that off on my taxes and share that with people. You can naturally write off some of it, but you're going to have a harder time with it. So, reasonable things are, and I'll go into detail with you on that, but literally I teach people on a daily basis not to go out and spend a ton of money that you're not already spending. It's literally teaching you how to redirect your living expenses and allow you to take deductions for business expenses, and you're using the same money. So, I'm not saying don't go spend a lot of money. Just take what you're currently spending, what your living expenses that you can't currently write off if you're a W-2 employee, and turn those into business expenses. So here's how it works. If you're attempting to earn an income, and what I call is doing the daily business building activities, and I'll share with you what the IRS says about it, but you've literally got to put in 3 to 5 days a week for 45 minutes a day, and you're doing daily business building activities to suffice the IRS. So here's what happens. As a W-2 employee, if you are a W-2 employee and you have an average household, and this is actually in America, the average household is $60,000 a year. So I'm going to break it down for single and married, just, depending on what you are. Obviously, as a W-2 employee, you don't have access to business expenses. So, and then you have a standard deduction or an itemized deduction. 96% of Americans never get to go over the standard, the standard deduction. So, if we take the 60 minus the 12 if you're single, 60 minus the 24 if you're married, that gives us our taxable income. Then you're going to pay taxes on that money. After you pay taxes, here's your take home. It's $46,000 or $49,000, and then you have a cost of living. So I decreased the cost of living from married to single by $3,000, but the average in the United States is $53,000. If you live in Greenville, South Carolina, where I live, is $63,000. Atlanta is like $70-some thousand. So it really, really adds up. So that's your living expenses that you really can't get rid of. So here's what's left over. And this is the problem. So if you are sitting down with someone and they're going in debt every single month and can't figure out how to pay their bills, obviously they're not going to see what you're doing as a benefit because they can't even figure out how to get started. But if you understand this, you can literally help someone free up $4,000 to $8,000 a year just by helping them understand that they can have a home-based business. So here's how that works. So we now have, let's say we have a W-2 employee that had a home-based business. This works the same way if you're a W-2 employee and your wife starts a home-based business or your spouse starts a home-based business. So can we all agree that we have living expenses and itemized deductions? So some of us may not be able to take them. I don't have enough itemized deductions to be able to write off itemized each year, but these are itemized deductions. So typically on a tax return, you can take standard deduction of $24,000 if you're married, $12,000 if you're single, $18,000 if you're head of household. So in order to qualify for itemized deductions, you must go over those numbers for medical bills, medical insurance, property taxes, real estate taxes, mortgage interest, and charitable contributions. The problem is almost all of those have some sort of caps. So for medical bills and medical insurance, you must have more medical bills and medical insurance than 7.5% of your AGI. So let's take that into, for instance, if you made $100,000 a year as your adjusted gross income, and you had $10,000 worth of medical bills, you would only be able to claim $2,500. So the first $7,500 would not be a tax deduction at all. So many people believe they're getting all these massive tax deductions. That's just not the case. And now with property taxes and real estate taxes, you have to actually go over, your cap is $10,000. And that includes your state income taxes. So you can't claim more than $10,000. I literally have one client this year that's going to lose $35,000 in tax deductions because of that one cap. So it's a big deal for you guys to understand that the better tax system is the second tax system which is for business owners. W-2s were created to take your wealth, whereas a business owner is literally created to give you wealth and help you create more wealth. So we all have living expenses as well. So we have things like meals and auto expenses and cell phone, travel, internet, home office, daycare, products that we buy. So all of these, and personal development for some of you, which I love personal development. It's changed my life. So we'll talk about that in a second. But we have all of these, and you can agree that everybody has them. So here's what happens when you start a home-based business. Now we get to write off medical bills. So you have to have a plan set up. It's called a Section 105, and we can help you, get you in contact with people that can do that. But literally your medical bills, it will allow you pay your spouse in turn as a paycheck. It could be $100 a month that you pay them. Your spouse will then in turn pay 100% of the medical bills, and then you reimburse them as a fringe benefit, and that becomes 100% tax deductible. Then you have medical insurance. So as a self-employed person, you get to write off 100% of your medical insurance. Property taxes. So those would be like, property taxes. So, if you had a car, RV, all of those, you would be able to write off property taxes. Business use of your home. This is a big one. And a lot of people really believe that business use of your home is going to cause you to be audited more likely. And that's not the case, guys. So take the deductions that you're entitled to, because that's just not true. So business use of your home, I tend to find $3,000 to $5,000 in tax savings, like not even deductions. So what I'm doing here is just giving you kind of an average, but there's obviously more tax deductions that you can take and more of the amount. So I'm just sharing you what I typically see on a daily basis. So business use of your home, you're able to write off a portion of your insurance, your property taxes, your mortgage interest, repairs and maintenance on your home. Also, you can write off, so you can depreciate your home. So that's a big one. And you can depreciate your furniture. So all of those are tax deductible, and that really, really adds up. And then I have people say, well, Courtney, if we depreciate our home, we'll have to pay taxes on it if we sell it. That's not true. The first $500,000 in excess of what you sell your primary residence, you don't have to pay taxes on anyway. So huge deduction there. Charitable contributions. I love talking about charitable contributions. What we have done as an accounting practice is we've decided that for every dollar that comes into our accounting practice, we're going to give a serving of whole food, plant-based nutrition to children in need through a nonprofit. That nonprofit is called Manna Relief. And so we love that. It's completely changed everything about our business, but we have made a decision and created a model of how we're going to pay charitable contributions. So because of that, and we're given from a gross income instead of a net profit, that becomes 100% tax deductible as what's called cost of goods sold. So you could do it for every serving of every product that you sell, for every product that you're selling, for every service that you're selling. However you want to do it, you just have to create that model, and it has to be either geared towards your product, your service, or your top line number, your gross income number. So, that's a huge deal. Then we have meals. So meals, you can write off half of your meals. So when you're sitting down having a conversation with someone, you can write off 50% of your meals. If you invite people over to your home and actually do a presentation while they're there, you can write off 100% of the meals on that. So if you buy groceries and you have people over to your home, then you can write that off as well. Then we've got mileage. So mileage is a big one. You can write off either 58 cents a mile for every mile that you drive, or you can depreciate your vehicle. But with the new tax laws, it becomes much more beneficial for you to depreciate your vehicle, especially if you have a newer vehicle. But we can go into that detail later. If you decide to go with actual expenses, you can't take mileage, but you can depreciate your car. You can write up your actual gas receipts, your repairs and maintenance, oil changes, car washes, and your interest on your car. So all of that becomes tax deductible as well. Then you have your cell phone. So, you know, depending on what percentage that you use for business, you can write off your cell phone. You can write off your internet, same thing. Depending on what you're using for business, you can write off that percentage of internet. And then we've got travel. So I love travel. Obviously, you know, I love going places. I go somewhere, gosh, at least every 2 weeks. I'm on the road. So I just got back from Las Vegas in an event, and I'm actually going right back there next week for another event. So all of my travel, my hotels, my airline tickets, my Uber, Lyft, all of those are 100% tax deductible for a business. And then on top of that, I typically will take my kids with me because they actually work for me. And I'll take them with me to events and they help me. But then I go to a ton of personal development events because that's what I speak about is personal growth and development and network marketing events typically. So the best part about that is they get access and benefit from what I'm learning on a daily basis as well. So hiring your kids is another big deal. So hiring your kids, you can actually hire your kids and pay them. I'm showing here $6,000 a year, but you can actually pay them $12,200 per year, every year per child. So, and I'll go into a little bit more detail on that in a second, but if they're under the age of 18, you don't even have to pay taxes on them. So there's no FICA taxes for them. There's none for you as a matching employer. There's no unemployment taxes, and there's no federal and state taxes that have to be withheld from their paycheck. And then you've got office supplies. So, you know, we're always spending money on new iPads or new iPhones or, you know, a new cell phone, a new laptop, projector, all that good stuff. Like this is something called a Smooth that I use to do presentations. Obviously, that is 100% tax deductible. You know, phone cases, you name it. You know, whatever you're using on a daily basis for office supplies can be tax deductible. So I think we can all agree that everyone has these deductions, or most everyone's going to have these deductions or these expenses. So, you know, the extra expenses that I talk about are advertising. Obviously not everyone is going to spend money on advertising. I spend very, very little money in advertising. But obviously I'm going to the right events. I'm going to, you know, I'm speaking on social media. I'm giving and delivering content. So if I were to boost a post, or if I were to put in a yellow page ad, I don't even know if people do that anymore. But, you know, if I were to go on Google and do Google, you know, like a pay-per-click, that's obviously advertising, so that would be tax deductible. Then continuing education, and I love continuing education. I call it personal development, continuing education, whatever you want to call it. And this could be a company event that you go to, or it could be something like Tony Robbins. You know, I love Tony Robbins. I'm actually a platinum partner with Tony. That equates to $85,000 a year that I spend to go to all of his events, get the coaching every single week, you know, and then I have access to the top 1% of the world, and which is, you know, where I want to be. So obviously it's helping me with advertising, it's helping me with marketing, it's helping me with coaching, it's helping me grow my business all at the same time. And I 100%, probably 1000% believe that you should put money into continuing education and personal development, because it's going to do nothing but grow you right here, your mindset, which is going to allow your business to grow. But then it's also a massive tax deduction. So I just love it. Dues could be things like subscriptions that you have. It could be a monthly membership that you have to pay for. So those are tax deductible as well. And then you have things like cost of goods sold. And obviously you're buying products anyway. You know, I tell people, go find products that you love, that you're already buying, and start sharing that with people, because that just makes life a lot easier if you fall in love with the product and then you start sharing that. So cost of goods sold is a huge deduction. And that could be products that you're already taking if you are branding yourself. So if you're going on social media and telling people about it, if you have to take the products in order to share that, then obviously that is a tax deduction. And any samples that you're buying for people to give away, that is tax deductible, or anything that you're selling as well. So that totals up to about $34,000. And the thing is that I see these expenses every single day, and they could be much higher than that. And I have seen them much higher than this. And I've already explained to you, itemized deductions and standard deductions. So you see that these things add up, but they don't add up. The ones that you can write off as a itemized deduction, they don't add up to be more than $24,000, especially with the caps. So now we're redirecting that $34,000 into business expenses. So here's what happens. And I'm just going to use $25,000 as an example. So you see that. And so we have the $60,000. We have now business expenses. Then we have our standard deduction. We have our taxable income. We have our taxes, our take home, cost of living, and then here's what's left over. So here's the big thing, is that is almost $6,000 a year in tax savings if you're single, and $5,000 a year if you're married. But here's the big piece that I love sharing with people. So that $5,000 or $6,000 a year in taxes, in savings, like bring home money, you would literally have to make an extra $7,000 to $9,000 in order to bring, so which would be $3.50 per hour roughly, and I have it on here. It's $3.79 if you're single, $3 an hour if you're married. That you would literally have to make that much more per hour for every hour that you work, 2,000 hours a year, to be equivalent to the tax savings of just having a home-based business. So it's huge, guys. And then when you actually start making money, here's what happens. So you add in income-producing activities, meaning that you're spending 45 minutes, 3 to 5 days a week, which tells the IRS that you're treating your business as a business and not as a hobby. So here's what ends up happening. Let's just say you made an extra $500 a month. So we have the increase in the income, the $66,000. We still have the same business expenses. We don't have to pay taxes at all on the business income because we have enough business expenses to offset it. So you're not paying FICA taxes on that, which is huge. Plus you're not paying federal and state. But here's our taxes, our take home, our cost of living, and the difference, guys, of you making an extra $6,000 a year, earning an income as a home-based business, is bringing you home $10,500 if you're single and $9,500 if you're married. And that's a huge deal. So you have to make almost $7 an hour, every hour, 2,000 hours a year in order to be equivalent to the extra $500 a month that you can bring home by having a home-based business. So it's just a huge, huge deal. So going into a little bit more detail on hiring your kids. Kids are super expensive. I have 6. So, sports, dance, college, smartphones, weddings, video games, all that good stuff. So you hire them and they in turn pay for their stuff. So the first $12,000, it's actually $12,200 of income is tax-free, and that almost doubled this year because of the new tax law. So the standard deduction increase, so that means that you can pay them $12,000 a year, $12,200 a year, and they don't have to pay taxes on that money. You must pay them a reasonable salary, so you can't pay them, if you were to pay someone else $12 an hour to do the job, you can't pay them $20. It needs to be reasonable, but you can pay them a reasonable salary. There's no Social Security or federal unemployment tax if they're under the age of 18 and it's incorporated and not a partnership. So we can walk you through how to do that. Obviously, you have to really give them a paycheck. You don't have to necessarily go through a payroll service. We can help you do that, but you have to literally put the money in their bank account. So there's a little bit more detail on that. And, then the next thing is social giving. So social giving is, I'm very passionate about it. That is combining your passion and your profits. And, I've always believed that Zig Ziglar, his saying, help enough people get what they want, you'll automatically get what you want. And that's where we started giving, from a gross income level. Charitable contributions become 100% tax deductible as a cost of goods sold item. So we're doing, for every $1, we're feeding a serving of food, whole food, plant-based nutrition to children in need. And, as of, this was actually about 8 months of work, 280,000 servings. We have up to date fed over 620,000 servings of food to children in need. So, that's completely and utterly changed our life. You know, it's grown our business massively, and we share that with people. You know, I want to help nonprofits because they're obviously hurting because of the new tax laws. They're not going to get enough as much benefit. People are not getting as much benefit by giving. So sadly enough, nonprofits are going to hurt. And if we start helping people give this way, then not only is 100% tax deductible for you as a business owner, but then it's also giving more. So I just love it. And so now what happens when you're making more and more money? So, you know, I tell people every single day, one of my top 3 strategies, and sadly enough, every single day I literally tell this to, you know, 10 out of 14 people that have no clue what I'm talking about. So you first want to register your business as an LLC with your state, and we can help you do that. But the LLC allows you to limit your liability. And then the next step, and that's all it does, it allows you to limit liability, and it allows you to do one more thing. It allows you to treat your business either as a sole proprietorship, which is a Schedule C on your personal tax return, or you can treat your business as an S Corp election, which gives you some massive tax benefits. It allows you to bypass almost completely, or at least 80% of the way, self-employment taxes. So here's the example. If you made $60,000 as a self-employed person, you would be paying 15.3% in self-employment taxes on top of state and federal taxes. So that's $9,000 that you would pay in taxes, just in self-employment taxes alone. Now, if you had that same S Corp election, that $9,000 would turn into around $1,800 that you would pay. So it'd save you around $7,000 or $6,500. And here's another great strategy, so you understand. There's this new thing called a 20% pass-through entity deduction. So if you're in a product or service business making under $250,000 a year in services, it doesn't matter what you make in product, then you are also entitled to what's called a 20% pass-through entity deduction. That means that, say I made $60,000 this year net income, I would only pay taxes on $48,000 in federal and state taxes, which is a huge, huge deal, guys. I mean, huge. So that makes it even more adamant for you to go out and find a home-based business of some sort. So in summary, and I will answer questions if you want to put some questions in the chat box. You know, I just wanted to make this super simple tonight. But, you know, there's never been a better time to own a business. And with the new tax laws, it's just getting better and better to not be a W-2 employee, or at least not be a W-2 employee in itself, just that. So you need to find a way to get in that second tax system. And, you know, I tell people network marketing, affiliate marketing, only because it's easy to get involved. It's typically very inexpensive to get involved, a couple $100. You know, I have an accounting practice. It took me, you know, 5 years of going to school. It took me, you know, creating employees. I have 5 employees who work with me here. You know, so, you know, it adds up. I mean, it costs a lot of money to run an accounting practice. And so, you know, obviously I just tell people, find something you're passionate about, start sharing that so you can get the tax deductions. So business owners are always going to get better deductions than a W-2 employee. And right now, W-2 employees lost all of their deductions that they had. So if you were a W-2 employee salesperson, you were, let's just say you were a mortgage broker, or, you know, you were a salesperson for a big company and you're a W-2 employee, you lost all of your unreimbursed employee business expenses, which is a huge deduction. You know, I had somebody lose $25,000 in deductions this year because of that one thing. So it's always beneficial, you know, as a 1099, which is a subcontractor, which means you're self-employed, you're working for yourself. You know, you want to take all the tax deductions that you're entitled to. Do not let people tell you that you should not take certain deductions. And the reason why is because the tax code is the exact same for you as a business owner or as a home-based business owner than it is for Amazon. And you can see, you know, all over the news, Amazon made $11.2 billion last year. They didn't pay a dollar in taxes. And maybe I'm wrong on billion. It could be million. I can't remember. but they didn't pay any money in taxes. Walmart pays on average of 0.12% in taxes, and the average W-2 employee is going to pay 40% this year. And that's not even including property taxes, gas taxes. That's not including real estate taxes, all those, and sales tax, all that adds up. So hire your spouse and kids. Why you want to hire your spouse would be the medical reimbursement. And you do have to have a plan in order to set that up. And we can help you with that, direct you to where you need to go. And then kids, you know, I have 6 children. I pay them $12,000 a year. That is $78,000 a year that I don't have to pay taxes on. It's called income shifting. And so by doing that, I'm pushing it off to them. I'm going to spend the money anyway on stuff for them. Instead, now I get to write it off on my taxes. It saves me about $28,000 a year. So huge deal. Don't do your own taxes. And the reason why, you are more likely to be audited. I'm not telling you to come to us to do your tax returns, although we can do them, but you don't want to represent yourself in an audit. It's not going to be good. And you also don't want to have an accountant who doesn't believe in your home-based business or your business or your deductions, because they're not going to help you in an audit. They're going to say, sorry, I can't help you. And what I see most of the time is that clients, hand over fist, get stuck doing the audit themselves, and I just think that's wrong. So, you know, we handle that in-house, but, you know, don't believe the whole hype that having a home-based business is going to trigger an audit. Having a business use of your home is going to trigger an audit. Doing your own tax returns, someone messing up on a tax return, like an error going from an S corporation to a personal tax return, that if those numbers don't match up, that could cause you to be audited. And a drastic increase in income, so gross income. So if you went from $5,000 a year in income and you all of a sudden made $500,000 the next year, that is going to more than likely trigger an audit. So, you know, the IRS is not going to audit you for dramatic expenses, although when they walk in your door, I know as an auditor, they walk in your door and they say, oh, we're auditing you because of this, 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 and this expense. And the reason why they do that is to scare you into not taking the deductions you're entitled to. So enough about that. I've thrown that out there. This is my book. You can buy the book at morerelaxinglesstaxing.com if you want. It is now, actually, it's $14.95. We have increased it. You can buy them in bulk, $10 for, or $10 for if you buy 10 of them. So it's $100 for 10. We added some information into the back of it to give you more deductions, more. You get a spreadsheet that you can add in, and you actually get a free tax strategy session. So for buying the book, you can also subscribe to my YouTube channel, is OTB Tax, and there is a More Relaxing, Less Taxing Facebook group. If you're not already there, join it. It will give you massive help in taxes. So, you know, I just want to help everybody have a more relaxing, less taxing life. And, you know, and by doing so, you know, this book will save you $5,000 to $10,000 a year in taxes. I mean, if you just read it and listen to the things that I say, or you can hire us. I mean, you know, we'll help you, whatever you want us to do. We are a full service accounting firm. And there are a couple questions that I'm going to try to answer. So do you have to make money in your home-based business to qualify for all of this? No, you have to attempt to make money. So if you're attempting to earn an income, either today or in the future, then it's tax deductible. So that means, like, for instance, I go to an event, a networking event, and I go to meet people. And so I'm assuming I'm attempting to earn an income. So I give out my business cards, or I talk to people about what I'm doing, and I collect their business cards. Then obviously I'm attempting to earn an income, so that becomes tax deductible. The other thing, so here's another question. What if I'm just starting up with this? If I want to be a coach and I'm working on credentialing. So all of those they turn into what's called startup costs. So if you are, you know, going to school to get your credentials, all that good stuff, then all of that is 100% tax deductible. What I would suggest is that you go out and try to make $1 of some sort. I don't care if it's $10. I don't care if it's $1. I don't care if it's 50 cents. But as soon as you make that $1, then you're in business. But but you also get to deduct all of the startup costs. So if I spent $5,000 to start my business, then I would be able to write off those startup costs as soon as I made $1. And it doesn't have to be a net income. What I'm saying is if I had this smart water bottle and I sold it and I sold it for $1, even if it cost me 99 cents, I made a penny. So that's what I'm saying. So just attempting earning income is how that works. So if and I think that's all the questions that I have today. So, you know, get the book, you know, morerelaxinglesstaxing.com. You can get it there. Subscribe to our YouTube channel so you can get more information. I try to post every single week at least to give you more and more and more information. And join our More Relaxing, Less Taxing group. So it's free on Facebook. You can find it. I do have a membership that goes into much more detail, but you can check that out. You know, it's a pinned post actually in the Facebook group. The goal is I love freeing up money for people, and I just want to help you guys understand that just find a home-based business, find something you're excited about, go share that with people, and get the tax deductions around it. And one more question: how can I get information on you doing our taxes? So here I will actually type it into the group. You can reach out to us. Strategy.youcanbook.me. So that is otbtaxstrategy.youcanbook.me. So you can reach out there, or you can also call us. Our office number is 864-663-6111. Okay, guys, if there's no other questions, I'm sending that now. If there are no other questions, I will be, you can reach out to us, OTB Tax, and that is outside the box tax.youcanbook.me. So I hope this helped you guys, and I hope you have an amazing night and get back to more relaxing, less taxing. Oh, there's a chat. There's a chat. Oh, you're welcome. Have a good night. And I apologize for my kids. They're being super loud.